The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Welcome to the Tiger Technicians Hour this March the 13th of 2013. And Wednesday, pleasure to be here. Monday, Tuesday, Wednesday, Thursday, Friday. And thank you, Steve, for 2 great hours, as always. A lot of education. Wow, folks, you should tune in and listen to the different technical, the way Steve discusses. He's got his special candles, but he's also got the traditional way of looking at candles. Great education. And that was really nice. Thank you, Steve. So the Dow is right now down 11. S&P is unch, so we've got a slight deviation, no problem there. The Qs, so let's just run the numbers. Dow's at 14,438, just missed a new recovery high. The day is young. I don't think it'll do today, but you never know. Suits me if it does. Dow's down 11, S&P is down 31 cents at 50.52. I just want to have a look here. 50.52. 15.57 was the all-time high. Is that correct? Let me just grab this chart here. 15.76. Oh, of course, 15.76. It was 15.52.87 was the... Oh, isn't that interesting? Look, we are now within just... Yeah, like wait 2 seconds, we might get it exactly. We might be at the exact top of 2000, March 2000. Isn't that interesting? 52.66. Go on, 11 cents. Come on. All right, well, can you put yourself into that time frame for those of you who were in the market 13 years ago? Exactly 13 years ago. I remember when I got my cell signal based on the ChapmanWave on the in January the 14th or something like that in the Dow, and then the Qs and the S&P went higher. I said, when we make the top in the NASDAQ, I believe it'll be the top that we will never see again in my market lifetime. Of course, I was also hoping that I keep living. You never know. It's not a good thing to say when you're testing the fates like that. But isn't that interesting? The S&P right now, 59. All right. Well, the previous high was back in October of 2007, 1576.09. It's not there yet, but so far the high is 1552. What was the high yesterday? I think that was the high, 1556.77. So there's that chart. There's that beautiful up channel spoken. I've shown this chart over and over. It's just going right in. If it goes to this high, let me just do this. In fact, I'll take a moment. There's no rush. We've got plenty of time. Let me look at this chart. If you're looking at Tiger TV, and if you're looking at Tiger TV, the most important aspect that you can get right now is the work that can be done with just 2 lines. I've added a couple more because it was very important for me to do the technical analysis just as diligently as I could. I did not want to leave out anything because there's a simplicity to simplicity, but at the same time, there are times when just being simple for the sake of being simple is not to the benefit of anyone. I needed, for my own sake, it was all very well to do the channels. I needed to demonstrate a technique that I often talk about. It's called the inside, for those of you new to my work, the inside track. Do you see that? Let's just take this line, this up channel from the 2002 October low of 768. Do you see that when it started to bump into this resistance, the red line, and not break above the green line, that inside track repellent line continued all the way to the top at the PED. But when it got to the S&P cash, got to 1555.90, fractionally above the 1552.87 of March of 2000, that was in leg D. Then it pulled back quite sharply and had a coda. This is the wrap-up of the whole move just another leg to the upside to peak E, which went to 1576.09. That was a breakout, but the closing price was at 1549.35, 3 points underneath the previous high. And that was a tip-off to say, whoa, it's kind of struggling here. Now look at that beautiful down channel, and I added 2 extra lines. This is wrong. It should have been green inside, red outside, because if it breaks the red line, that's a real problem. And if it holds the green line, that's very good, which it did. So anyway, I just wanted to show that. Now, the reason why I brought up the S&P chart is just I wanted to have a quick glance back, because of course I should have remembered 1576. That is a target price, but that's got nothing to do with reality. The reality is, you see this dashed line? It's a very interesting thing. You see, I've added more and more technical verification of these dashed lines. When you look at the New York Times front page edition, is a book that has all the front page, all the news. And in that particular instance, if you look at it, what's fascinating about it is you have some information from very early on. Then as you get into the year 1990s, as they're starting to produce the book, they add this irrelevant stuff like someone hoisted a flag. It's something crazy that who cares? It's got nothing to do with World War II started. Because as you get involved, this is the whole thing about technical analysis, that you can sort the wheat from the chaff. You can take away anything that's irrelevant, but if you want to get really caught up, you can add so many things that when you look back just a month later, you say, oh my goodness, that was pathetic. Why did I even include that? Why was I even thinking of that? It's irrelevant. So I could take out everything that's irrelevant, but for now it's really important to add a couple of tools, in this case trend lines, to say, in this case, every time we've gone above that cyan line, it's been very good. Then there's an inside track that says this is really the line that I'm looking at, because this dashed line here says that if this month the S&P takes out 1568, there's just a really good chance it's going straight to 1576.09. If it stalls in this area, because it's got that trend line resistance, and there's a left side, right side price time match. In this case, it goes to next month. There's another one that goes out further towards December of this year. But in the meantime, back at the ranch, we're just going to be very, very cautious and say, leg C up says, no matter what happens, we should make higher highs to the high that was made this week at, what did I say? It was 1554. Okay, just keep it simple. So anyways, I didn't mean to get off track like that. So I was talking about gold. Gold comes, comp index is next. It's up 1 at 32.43. This is very interesting. Gold is down 6, 1585. Silver is down about 26 cents at 28.90. I've done a lot of work on these different charts. I don't think it's ready yet, but I believe that we will get some spikes to the upside. I wouldn't be surprised if we make some kind of an arch formation that turns into an M formation with no big buy signal or anything in the gold and silver index. I don't know yet. This is my thinking. We'll see how the chart actually reacts. Then you got copper up 47 cents. Oops, wrong one. Copper is down $1.15 and 3.5. A penny. It's actually, I'm reading it in wrong decimals there. And we've got crude oil up 46 cents at 93, and bonds are down 13.30 seconds at 141.05. Now, just real quickly, I just want to show you in my opening call. This is what I show my subscribers. Give a very big report. It takes time. I type all this stuff. Unfortunately, in TradeStation, if you make a mistake, you have to retype the whole sentence, the whole line, that is, because you can't just change letters. It takes a while. But what I wanted to show you is this. You know how I spoke about in the S&P, how I said if the S&P SPX takes out that downtrend line, there's just a really good chance that it can go to a 1-to-1 to the upside. My first target would be from this low to about there, which was 1542. When it's gone 1-to-1, slightly, just a little bit higher than the 1-to-1, and that's an expansion. And it says, at about this particular point, you should start to get some kind of a consolidation. However, this is really important as far as I'm concerned. The weekly chart has broken the trend line resistance and is up way above it. The MACD is very strong. Stochastics at 94%. The on-balance volume is saying, hey, we're starting to get to some kind of toppy action. Be careful. But the most important thing is in the daily chart, the stochastic has only now just gone into the 96, 97% area. The MACD is strong. I believe that we're going to go to leg C and leg D in the ChapmanWave, and that's one of the reasons why we bought the Dow 30 with a 200% long DDM a week from Monday at the opening. And the reason being is if I identified correctly that was, in fact, leg A and then peak A the day after we went long, there should be B to C to D, because that is the name of the game. That's what we anticipate. That is what is expected in the ChapmanWave methodology. Let's go to our first caller. We've got Mike in Long Island. Hi, Mike. How are you?
Good. How are you doing?
I'm doing very well. Thank you.
Just one quick question, and then we'll get into Ralph Lauren.
Wait. We're getting into Ralph Lauren. Let me just change my shirt over here, because I haven't got a Ralph Lauren shirt on right now. But okay, I'm ready. Oh, now I'm ready. Okay. Question away.
In the opening call today, what do you think the chances we get into the 143s on the DIA?
DIA. So based on the 120-minute chart, what would need to happen was that the early selling had to hold, and that would be the most. Folks, what I've been showing, I do this all the time. In this case, it's a little bit of an experiment in that I want you to use, it's still active, but I want you to use the information that's there. And because the MACD was negative in the diamonds, the Dow diamonds, and the stochastic was at 80%, but I thought it could possibly go lower, I also didn't want to fight the unbalanced volume, which is really very strong. So I showed a chart pattern that said, there could be a down channel. That's the dashed line that I'm showing here, Tiger TV, Tiger 1. Of course, these shows are archived on Tiger 13. And what I showed is I circled the 143s. Well, earlier today, when the diamonds were down to the 144.09 level, I thought, that's going to be very interesting. And the reason why I said that is that the volatility index, the VIX, was still just hanging out in the mid 12.40s and slightly lower. I thought, wow, that is interesting, because the volatility index needed, in fact, to get very strongly into the 1260s or higher to sustain a down move. So let me talk just briefly about that, and I'll talk about the Dow Diamonds, my thinking on the Dow Diamonds, and then we'll go straight to Ralph Lauren. It'll also give me a chance to see if I updated my chart of Ralph Lauren. Folks, we'll be back. We'll be back with Mike in Long Island. We're looking at Ralph Lauren and the Dow's down 5, S&P's on. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 877-927-6648. And we're online right now with Mike in Long Island. We're looking quickly at the Dow Diamonds, which I'd shown my subscribers. I do a ton of work every single day to show what I'm looking at, why I'm looking at it, and I try to also extrapolate from the data what might be happening further along in time. But most importantly, in this case, the trend lines that we're looking at, I'm not going to say it's an experiment because this is something I do all the time. It's just an experiment to do it in the Dow Diamonds with a different kind of specificity and with target prices. Usually I just show the patterns, but in this case I actually show with a circle where I think it's going to go. And sometimes you just have to move a little bit to the right. The price might be good, the timing might be off. Sometimes the timing is good, but the price is off. In this case, we'll see, because what I'm looking at is if by the end of the day, and I suspect it's either today or tomorrow, there will be a pullback, and for the first time the Dow Diamonds will close underneath the 9-period moving average in the 120-minute chart. Do you know that this is I wouldn't call it a record. But there is a record going on right now. This is 8 days. This is matching some kind of record going back 2 years or something. 8 days up, consecutive days in the Dow. If they make it 9 days today, I don't know how it's going to be tough to do, but if they make it 9 days, that goes back to 1996, and a little later on I want to show the chart of 1996. Right now we'll do one thing at a time, and my target is the 143s, and I suspect it might be hit maybe tomorrow, I'm not sure, but 143s will be the very big test, because if it breaks under 143s, then suddenly the daily chart is going to say, okay, a little bit more time out than the usual 1 to 3 in this stalk leg formation that says buy the dip, buy the dip, buy the dip. So I hope that answers your question. If it goes above 144.70 today, that's the Dow Diamonds trading at 144.38. Well, besides being amazing, that'll just extend this whole thing out. But this platform that I'm looking at here, going to the 143.21 to the 143.09, let's call it 143 level, is really my downside target. That's the big test. So, and also I was just talking about the rising channel in the Dow. It's Dow 120-minute chart, not the diamonds. It's a slightly different chart. That has a peak A going to D, then another peak A, B, C, D, and then I drew this little, there's a rising triangle, a narrowing wedge formation. That, if you read the books, they say that's very negative because you can come down, you can really smash to the downside. I don't think of it that way. I think of it as almost always forming some kind of a cup handle and then a retest of the highs. And at that point, you've got to be careful. And that kind of fits very much the scenario I'm looking at for peak C and D to come in the next week in the Dow, higher highs. So, well, that's that. Now I'm going to go to the chart that you really want to talk about, which is RL, which is Ralph Lauren Corporation. Been a fantastic company. Just did a retest of the previous high of 182.48. It went to 179.90. This is a gray peak B because it's underneath the previous major high. So let me just get the color right. It's a gray. I call it a gray ladder. It's not a formal ladder until it breaks decisively above. I'm going to make a suggestion, and I think you got your eye on this as well. The pattern that's forming now is the kind of pattern that I really like as a sell signal. That's not a sell mode. I need a lot more action to get to a sell mode. But just on a short-term basis, the previous high was 179.90. It's come down, made that left side diagonal move. Now it's making the arch pattern a little bit high, but it's still the pattern that I call the lowercase h, the dreaded H. Based on my 3-minute chart, I'm still looking at the Dow possibly trying to get above 14 to get leg D in the 3-minute chart. So we'll see if that's going to be possible, 4,048.52. But in the meantime, because I've seen this counter trend rally in the Dow and the S&P, intraday that is, Ralph Lauren is ignoring it. So I'm going to make a suggestion here. Before you even tell me what you've got, I'm going to say, if I was looking at this chart, I would start a very small position in Ralph Lauren, even though it's an incredibly beautiful chart, looking backwards. Looking forwards, it says, be careful, because the monthly, the weekly, and now the daily have the same, either a cup formation or a successful dreaded H going back to the top without reaching the top formation in the weekly. The 120-minute chart has the same arch formation from a peak E top. I have a target of 169, and that could be reached within about within a week. I think we could be at the less than a week. In fact, we could be 169. There's the break. So I haven't even asked you what you want. Hold on, I'll ask you what you want to do with it, and I'm telling you now that I'm looking at it more to the short side than the long side. I'll be right back. Folks, we're looking at Ralph Lauren, Dow's down 10, S&P's unch. I'll be right back. Basil Chapman, 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. at less than $75 per month can provide you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and we've got Mike in Long Island. I'm going to have to ask you, Mike, tell me real quick what you do, because we've got a bunch of callers now. Mike, what are you doing with RL?
I'm shorted. On the monthly, I have a peak E, and on the weekly, I got an F, but I could be wrong.
Monthly was a peak E, and it hasn't gone to higher than that. Yes, peak E. Monthly I've got, well, I can see which one you might have missed. A, B, C. You might have missed this one. Someone else did that recently, called me about it. Asked me about it. The high of the 24th, the week of the 24th of August is 160.76. Next week, the high is 160.71, and then it's 162. I think that's the one you missed. Check out that August one. I think you missed it. So you're short. I agree with you. Let's make this real quick. I would put some kind of a stop above 178.69, even if it's just partial stop on the buy stop. But I'm targeting the 172 level within a couple of days. We'll see what options expiration does. If options expiration pushes it to 170, then it's showing weakness immediately. So I agree with you. I think it's going down. It might not be in a hurry, But we'll see, because if it drops 3 points in the next 2-3 days, and that says, okay, it's showing weakness. Okay. Thank you. Congratulations. A good eye and good call. Thanks, Mike. Let's go to Joe in Avalon, Long Island. Long Island?
Yes, Long Island.
Oh, okay, another Long Island. You'd like to look at?
E-Trade. I got out of it in the beginning of the month at $10.65, like $1 less than where it is now, and at a loss, of course. And I'm looking, is now a good time to get back in your opinion?
Okay, yeah, a couple of things, folks. In fact, I've not looked at E-Trade for so long, I forgot all about it, in fact. Thank you for bringing it to my attention. I like it very much. Now, is it getting a little bit overbought? On the daily and the weekly, yes. The monthly, and this is going to be really interesting. Wow, this is going to be fabulous. Sorry, I just throat went a little dry there. The monthly says that if the next sharp pullback coming up in a week or two that I'm expecting, not the very big one that still has to wait for the weekly chart and the Dow and the S&P to make their tops in this cycle, if it can hold and only get back into its 11th, folks, ETFC, E-Trade Financial. So this is the company that has E-Trade, the software package as well? Probably. I like it. I like it very much, but I think you took profits. You took profits nicely.
Well, I took a loss, really, because I had it from way back, from way back. But now
it's too late to look at it backwards now, but what would have been good is if you had taken a chunk off and kept the core, because you got it down so low. But it was making some kind of a double top, and I would agree with you. I would have been taking something off as well. Now what it does is the stochastics at 92. Here's what I'm going to recommend. You've made some good money with this. I'm going to recommend you go right back in, even though we're within a day of a pullback because it's leg C, but just a tiny little bit, and I'll explain my reasoning. If you can get a small little bit now, and I really mean small, so from your profits, you're taking a small bit of your profits. It's even less than as if you were getting a position. The reason being, I think it's going to make a leg D, could even go a little bit higher, because the cup and ladle ChapmanWave breakout pattern, which it's in, invariably goes to a D. The MACD is not that great, it's positive, but the stochastic is very strong at 92%. So I think you could have this as a short-term trade, and if it breaks into the $11.90 to $12.30 area, just raise your stop and say, great, I'm in the position. I would have loved to have more, but I'm in the position. Here's my thinking. In the next big move to the downside, I don't see this breaking. No, I shouldn't say I don't see it. Anything can happen. But I wouldn't be surprised if the next move down, it comes back into the $11 to $10.50 area to test the recent low of $10.45. 1077 is the 9-period exponential moving average on the weekly chart. I'm going to keep an eye on this, and I'll explain what my reasoning is. If the monthly is making a rectangle formation, and it's established that the lower half of the rectangle, I'm going to draw this for those of you are either in the den or you're looking. This is a stock that once traded at $277.60. I shouldn't laugh, because there are some people, I'm sure, they're still actually holding the darn thing. It went down to $5.90. If it's, and I'm going to draw in the rectangle here. I hope it doesn't make it too messy. Let's just go right there to there. I'll do it quickly. And I'm also going to draw a midpoint line that says right here, right there at the 20 level is the top part. There's nothing trading, just one spike to the upside since 2009, and everything's been in the bottom. But look at this. If I draw another line in the middle of that, not necessarily in the middle, but within the parameters of the middle, I can say, wait a minute, the monthly chart has traded for 2 years above $13. It's traded for a year and a half below, and it's just dying to get back to that $13 level. If it can get back up, then all of a sudden I'm looking at a new trading range which says that the high of $19.90 to just over $20 could be the upside target. Looking out, this is the monthly chart, looking out So here's my thinking. If you just nibble on it right now at 1161, just to give yourself the pleasure of at least getting it to either a D or an E in this next move up in the daily, and then I would call me again in a couple of days. Let's see how it's doing. Call me Monday or Tuesday. But in the meantime, what I'm anticipating is that it could, in fact, hold $11.15 to $11 over the next week and a half of all the gyrations in the market that I'm anticipating. And what's happening now is the weekly is improving and is looking very good. So I'd like you to at least kind of enjoy part of that if it's going to work out. And all I would do is I'd say if you bought it at 11.64, tiny little bit, give it a 61 cent stop at $11 or $10.99. Just, it's not going to be a big deal. You've made money, but it's just a tiny position. And my reasoning is it should go to a D. You can raise the stop to a break-even trade. If it then pulls back, because the market is taking, next week I'm anticipating some sharper moves, possibly to the downside, then what I'd be looking for, and then it goes even higher for the Dow leg C and leg D, so that should participate with the market. At least you're in it. And I would do this. If in the next week and a half we haven't spoken, but suddenly the thing's trading at $10.90 to $10.60, call me and we'll look at it again together, and then I might have a completely different angle because the weekly chart will be giving me a lot of information. But that's just my thinking, because this is a stock that has the potential to go to between 15 and 19 over the next 3 months.
Okay, thank you very much. I appreciate it.
And congratulations on a fabulous trade, and thanks for bringing it to my attention.
Okay.
Thank you, Mike. We're going to go to Lou in Nashua. Hi, Lou. How are you?
Fine. How are you, Basil?
I'm very well, thank you.
Thanks. I'm just wondering, I'm thinking of shorting the S&P and looking for it to pop to the new high before I do that.
Okay. So now I have to ask you, just from the tone of your voice, you're expecting a very sharp pullback if you're going to go into the puts, and you've patiently waited. If that's the case, are we looking at time, or are we looking at price, or are we looking at both? Because if you're looking at both, I don't think this is the move that's going to give you the big pullback. I think the move's going to come when the S&P is making leg E in the weekly chart, because the Dow is making leg D, and that's where I'm expecting, where a lot of people have gotten in late. That's the market turning around and saying, hey, I'm sorry, folks, every April, May, I've taught you a lesson you haven't learned. I have to do it again. So that's my thinking. Now, if it's a shorter-term pullback, that I would see on the daily, I would still wait for C to D. I'd wait for D before I'd get into a position. But if you're talking a real quick trade, because we've had 8 days up, and even if it was 9 days, hey, there has to be, at that point, you have to expect a pullback. Even if it went from let's call it 15, let's say it gets to 50, 57, 59, let's say 59 to 1561. A pullback to 1542 is fabulous if you got puts. And are you looking for this coming Friday, or are you looking out, looking in April or May?
No, I'm looking shorter term.
Okay. If that's the case, I'm going to have a different slant completely. Because the daily A, B, C, D, E, this is leg E in a new buy mode in the 120-minute chart. And if you're looking at Friday, I think you're going to get a real quick turnaround. I thought it might be later today. It might be tomorrow. I'm not sure. But in the meantime, the way I would look at what would you do? You'd go to what strike price? You'd go in the money or out the money.
Yeah,
are you looking for
out of the money?
So are you looking at a white lightning type thing?
Yes.
Okay. All right. If that's the case, you've got to squeeze to the very last minute. And this is what I'm going to recommend. Okay. Folks, we'll do this together, because I like to do for my subscribers every once in a while, we do a white lightning trade. Haven't had one for a while, although I had a fantastic one last time. I didn't put it on. I got nervous right at the end. It was DuPont, and it would have gone to 3 cents and then spiraled higher. Well, you can't look back. This is what I'm looking at here. So you've got the Dow's at peak D. Okay, I think I've got a plan here. Let me just give you exact numbers. I don't want to make this messy. It's got to be exact. I'm going to go to the 15-minute chart. Here we go. Hold on. Hold tight. 15-minute chart. I need to do it over here. Give me a second. I'm not doing it on this. I'm doing it on another screen. Okay. Has the premium shrunk in the ones that you're looking at, in the puts that you're looking at?
I'm not sure.
Okay. And you would go to, if it's at 1551, would you be looking at something like a 1545 or 1540?
Yeah, just about that. Yeah, 45.
Okay, 40. I wouldn't go more than 40. I don't think it's going to be as deep as people would expect. I think it's just a sudden slide. That's what I'm expecting. Maybe Monday is actually the deeper decline. So this is what I'm going to advise you to do. Knowing the risk that it could turn around the other way, and even if it's just a small amount that you're putting on, there is the chance everything could be wiped out. I'm going to suggest that the S&P is working hard to get into the plus territory now. The way I'm looking at it, there's a bit of a rectangle formation in the 120-minute chart. I would rather you buy a pop up and get a position on the 45s than to buy it on the way down. So we're in an area where I'm not sure that the S&P could go much higher than 1556. I don't think it's going to go much higher than 1557 to 1559, which is only 3 points. But when you're playing puts, that could be a big premium. So I'm going to suggest you just nibble right now. Nibble on the 45s. And if there's a pop-up to anywhere into the 15, you want to pop up anywhere into 50-51 right now. If it goes to 15-53 or higher, add just a tiny little bit, and then I would not do anything. If by the late afternoon it's starting to come down, you've got it and it's coming down, that's great. You might even want to add to it. But if by this afternoon it's just kind of stuck up here, I would just stay with the little bit that I've nibbled, because overnight there's a chance that the S&P futures could come down, and we open down in the morning, we gap down in the morning. That's what you want if you're already in the position, because then your premium will scream to the upside first thing in the morning. So I don't want to make it complicated. You can nibble on a couple of 45s right now, but I would prefer more of what you want to put on a pop-up. And then you've got all of this afternoon, or maybe all of tomorrow, into Friday. And I suspect between now and Friday that there will be a dip, and that dip will first test 1542. The doji candle, 1445.82 of 1330, of 130 yesterday, on the 8th, no, of the 8th. That's the candle. If it can get below that candle, that's very good. And it will say, yes, now I can test the 1545 to 1543 level. I suspect if there is going to be a decline, then you want to see the volatility index climb to the $12 day, 1241. What do you keep the volatility index on a little somewhere? Can you look at it during the day?
Yeah.
Okay. You want to see that start to climb, and it needs to climb to the 1465, the 1487 area. I mean, so 1265, 78 area, and then preferably get into the 13s, and then you're going to look good. So nibble on a few now, add a little bit more on the upside. Don't get carried away. If it starts to decline, you might want to add one or two more, but that's the way I would play it. Thanks for calling, Lou.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. So we're going to show, I always put this in, I didn't type it in this particular instance. I always say a rectangle formation, if recognized early enough, can last a lot longer than your patience. And if you look at this right now, you're looking at the NQM 120-minute chart. This is the E-mini NASDAQ 100 June contract going in a rectangle, and it's testing today, tested exactly to the exact 120-minute bar right now, the 2782.50 low. So if that starts to break down, that's one thing. But if it stays in the rectangle, it can stay here just a while longer. That's number one. Number two, when I look at the SPX.X, and this is just for Lou, Lou's listening, Lou, that just might turn into a rectangle as well. And they could stick it here for another day or two. I don't know how they can do it, but they could do it. Because the MACD is turning down, stochastics at 69%, and yet the price is holding. So I wouldn't get too carried away. What I would do is that as soon as it breaks down, and in this case, as soon as it breaks decisively below 1546, then I would, if you started your position, I would start to monitor that really quickly. And if the volatility has to screen, the VIX index has to push higher. It has to go into the 1270 or 80 area and hold there. And then the pressure will come on for the selling. If it goes to the 13s, that's even better. You could even add a little position. But you don't have to get carried away. This one is not as clear. If we were at peak D instead of possibly a peak B in the Chapman wave on the S&P and the Dow, I'd say, hey, just add to it. But it's not that clear. It's clear to me that we're going to have a pullback. It's just not clear that in this particular instance, the 9-period moving average of 1542 would be my target. But they've done a fantastic job of holding the market up at this particular point. I suspect when it goes, it's going to go quite quickly. And you certainly could give back, a chunk of the last few days' gains. It's not a problem at all. So that's what I wanted to tell you. And if it spikes higher and holds, and the volatility index is down in the 1420 area, I'd be careful with those puts. I wouldn't get carried away. I also wanted to mention something. For at least a year now, it's over a year, we've been hearing the word revenue for tax. If I recall my economics 101 correctly, revenue is earned income, isn't it? So I don't know why. It's an amazing thing. As long as I've been here in the United States, it's always fascinated me how a word can be obfuscated, how it can be changed slowly. And if you remember, the word luxury is luxury. All of a sudden, some ad campaign came along and called it luxury with a G. It sounds so good, luxury. It sounds like it's even more important than luxury. So be careful. Revenues are taxes. Just remember that. I just thought I'd get that out. I've been wanting to say it for a while. Now, let me just do another thing here. I wanted to go to the volatility index. In fact, if I can, I've got a moment. Oh, yeah, this is what I wanted to do. I had this already yesterday. I forgot. My triple bond chart rate that are weekly that I'm looking at here. This is the 30-year Treasury bond in white. It's gone to a leg E, possibly a peak E. The 10-year. This is the golden one here, has gone to an F, but it could have recycled to a brand new A. I don't know. And the 5-year is in peak E. And that says to me, be a little careful here, because it seems to me there's a chance that bonds are getting kind of close to some kind of a bounce. That's number one. Just based on this, if it breaks out and the 30-year yield goes anywhere towards the 33.5 to 34 area, that's going to be very interesting, because it's going to start to retest the highs of 34.90 back in March of 2012. Haven't got a chance to look at my three charts here, but we'll do that tomorrow. There's plenty of time. I'll be back tomorrow. Stay tuned for Larry Pesavento. Oh, Thursday should be a wonderful show. Oh, Wednesday. Another wonderful show with Larry Pesavento. I thought it would come